The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 22nd, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to you and I just past 1 o'clock in the afternoon on this fabulous and fantastic Friday. I want you to know that I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. 877-927-6648. Internationally, 727-445-1044. That way we can both put our eyes on whatever charts it is that you're looking at and see what these markets are doing out here. So let's go ahead and get this show kicked off on this fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 151 points. She's trading at 16,034. S&P's up 29 points, trading at 1898. NASDAQ Composite up 94 points, trading at 45.66. The Russell 2000 up 16 points. Gold is flat. Silver is flat. Light sweet crude is up $2. Trading out at 20. Where's light sweet crude? $31.62. Lead the charge here, dollar-wise to the upside. You've got Priceline, $30 to the upside, 2 3/4%. Amazon, $21, 3 7/10%. Google up $18. Regeneron Pharmaceuticals up 18. AutoZone up 13. To the downside, leading the charge out here. Let me see. American Express. AXP, it's off $7.77. So it looks like the one-armed bandit has just struck. That's down 12%. Net lease is off about $6 out there. Chipotle down $6 as well. Otherwise, my screen is just populated, it looks like, with the ETF structures out there. Okay, so what are these markets doing? Where do we begin? Where do we begin? Because that is really the question out here. Well, let's start with taking a look at, let's look at some daily time frame. Let's start by taking a look at the S&P futures contract. All right. If we take a look at it, what we're going to notice is that it made a seventh wave move to the downside. Seventh wave, that seventh inning stretch out there, oftentimes where we see market reversals, no matter what time frame chart it is that we trade on. When we see those levels get taken out, they tell us that Mr. Momentum is really in charge out here. Now, price moved lower, has done it with less relative weakness out here. Nice little candle session that we have going on here. So the daily, we know that the S&P futures contract has gone back to test a couple of different levels of support in the past, right? Back here in October of 2014, in August of 2015 out here. And those cases, we saw that Morningstar reversal candle signal that had formed. It's taken us this a little bit of time here to get off of this bottom. Nonetheless, we are off this bottom. We know prices stopped at a level of support. Looks to me like a bounce is underway. That is inside the ES Mini on its daily time frame chart out here. If we take a look and go down to a 5-hour chart, the 5-hour chart, we'll see that price is really right up against resistance. If we take a look at its TAS market profile high, that's somewhere right around the 1890 level. Closing above 1890 today would suggest that the S&P futures contract, has cleared resistance, that it can move higher. The real number to be watching, it's not going to show up on any market profile, any swing point or anything, is going to be 1909.50. I don't know that we'll get there today. But if we do Sunday night, you see price trading above that level. What I can say to you, what I can suggest to you with conviction behind it is if you're still short the market, unless you have an amazing long-term perspective out here. Remember, trading is about making money, but you may have an investment strategy and you like the idea of writing things down and then riding them all the way back up and writing them down again. If you get above 1909.50, it's really giving you a 1909.50. It's really giving you a signal that being on the short side of the trade is the wrong move out there. We're not there just yet, so you don't have that signal, right? If we take a look at the 2-hour chart out here, in the case of the 2-hour chart, there's your 1909.50, shows up on my screen. You can see that we're in only wave number 5 to the upside. Of course, we know that markets can start to move down when they get to waves 4 through 7 out there. So you've got a level of resistance to be paying attention to. A little bearish engulfing candle had formed here during that last 2-hour session. So we do know that the sellers have shown up, and that says the resistance level is the high of the day today. A lot of work to get to this level here over the course of the last 3 sessions out here. So the market is a bit tired. If we take a look at the ES Mini, this is a 30-minute time frame chart. We'll go take a look, and we'll actually go down to the 10-minute chart because you and I were watching the consolidation patterns yesterday. You've got an A to B equals CD pattern that is formed out here. That doesn't complete until 1908. So I gave you 1909.50. This has got 1908 written all over it. This is only in wave number 6 to the upside. If we get a nice flurry coming into the close, don't know whether we will or we won't. But if we do, that's going to get us into wave number 7, that 7th inning stretch. If we don't, it'll be Sunday night. Well, it could be Sunday night, right? The market doesn't have to actually go any higher than where it's at. But if it does, you know, and you see that, the question is going to be, if it does it's Sunday night, there's a pretty good chance I'm going to get one of those price relative strength divergent patterns out here. And if the bears show up, it just simply says, hey, it's the end of the move higher, or there's some retracement that is going to take place out there. So that's the S&P futures. We were looking yesterday, and here's how you can get higher to a little bit higher price. We were looking at the 10-minute charts here for the ES Mini and the NQ as well. We'll go look at both of those. If we take a look at the ES Mini, you and I looked at that consolidation pattern. We like to spot those consolidations as soon as they show up. Why? Because it gives you and I a measured move. And we did see where price, yesterday while we were on the air, we saw where price was breaking above that level, got back inside and said, hey, anytime you come back inside the consolidation, it can run all the way back down to the bottom. Luckily, the market profile showed up at the same time that said, okay, maybe what's going to stop the descent out here, buyers and sellers, because that showed up as a bullish pattern. You say, what do you mean bullish pattern? What I mean by bullish pattern out here, we take a look at this profile. We can see that point of control. That's a center line. That's that little dash line closer to the bottom of the box versus the top of the box. We can see how that, in fact, acted as support. And then last night, we saw price get back above it at about midnight, and then come back and test it at about 1 o'clock in the morning, really stayed there until about 140, 150, and then price went ahead and took off. If we take a look at each of these other markets, successive market profiles that have formed out here, we can see that the bottoms of the box out here continue to form at higher levels. That is a bullish, for me, as I take a look at them, as I've studied these profiles, that is a bullish signal. We can see price has gotten above it, come back and retested as well. It may have retasted it, I don't know. But retested the current box, which is held as support. And that says there's no reason for the ES Mini to continue with that consolidation pattern to get up to the 1913-ish area. 1907, 1909, 1913 may be some stiff pièce de résistance. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 161, S&P is up 32. Let's take some questions that we have that have come in by email out here. We've got a question about NVIDIA. NVDA is a ticker symbol. And the question is, just out of curiosity, is NVIDIA making a Tiger Gartley on the monthly chart? So let's go take a look at NVIDIA on a monthly basis. And if we take a look at this chart, first, any type of, and this, by the way, the question really is a Tiger Gartley sell pattern. And if we take a look at it, every Gartley pattern has really, just one thing in it. It's got an A to B equals CD that is in the opposite direction of a longer-term trend that was mixed out here. If you read H.M. Gartley's book out there, he wasn't dealing with Fibonacci ratios. He was just looking for the A to B equals CD pattern. We know, though, more information than maybe he had access at his fingertips then, and that is that we like to put those A to B equals CD patterns along with retracement levels. 0.382, 0.618, 0.786. So let's go first take a look at the A to B equals CD pattern out here on the monthly basis. And your A point is going to be the low. It's going to be the low swing point out here. That's going to be the trading session from November 2008. That's our A point. Our B point, very clear, that is February 2011. And the retracement out here looks like that actually comes down into November of 2012. And what we can see here is that it has completed at least the 1-to-1 A to B equals CD. That price projection would have been 31.57. It completed that here with the widest type ranging bar back in November 2015. Petered out a little bit in December out here. And now you've got a bearish reversal signal, at least at this stage of the game, as of January 22nd. So we've got another 5 trading sessions left out here before we can make a determination as to whether or not we've got some type of bullish reversal signal out here. But at this stage of the game, we do. So now let's go take a look at, the question was, is it a tiger? We'll take a look at retracements. Clearly we can see that it's a retracement. We'll go figure out if it's 0.786, which it looks like visually to me that it is. But the reason that the question was, and alertly so, asking if it was a Tiger Gartley sell pattern, Because we take a look at the B point, which has 600 million shares on the month of February 2011. And when that level was passed back here in October was 200 million shares. Then 183 million in November and 140 really in February. So we know that price is up and over at B point on a monthly basis with light volume. So I'm assuming here we're going to see a retracement level that is, so this is really right around the 0.786 area. You can see that's 32.41. And the answer to the question is yes, on a monthly basis, as long as when this closes at the end of next week, we still have a bearish reversal signal, then you would have a Tiger-Gartley sell pattern. And then from there, you've got to figure out, well, if you're going to go ahead and short the stock. Now, that's what it's done on a monthly basis out here. If you're going to short the stock, where's price likely to head to? Remember, all Gartley patterns, it's very simple. They have 5 possible outcomes. We never know which one is going to be fulfilled, but what we do is we just simply start with one at a time. Now, in this case here, the first level is going to be your 0.382 retracement of that pattern, which is 23.17. So then you've got that risk decision that you've got to make with regard to taking this trade, because what should have been old resistance, in this case here, old resistance, we're going to go with this volume that price got above that 818 million or 600 million on February, the month of February out here. That really could now start to act as new support. Take a look at what's happened during the decline of NVIDIA. Look, it didn't hit it exactly to the tick, or in this case here to the penny. 2617 is a number that now could be acting as support. Okay, that volume there may now act as support out here. And you can see that the low came in at 26.45. So you've really got to make a assessment here with regard to NVIDIA. And you probably want to go take a look at other charts like daily charts, weekly charts, try to figure out what it's doing, maybe take a look at market profiles. You know, and as we take a look at this, we can see that certainly NVIDIA had a breakout session the day of November 6th. That had nice volume, 29 million shares to the upside. And as it's pulled back here, the highest volume day was only 21 million shares out there. So, you know, it's pulled back in essence into an area where it had broken out. And so what I would be paying attention to here is, does NVIDIA break the swing point, which would be the trading session here of January 20th at any point in time, and does it do it with volume? If it does, price is then going to come back on a daily basis, what we're looking at, to a previous breakout gap up level, which has already been tested as an area of support. And that is in your price range of probably about $20.11. So that is ticker symbol NVDA. Also had a request to take a look at, see, I wrote those down. WNR is the ticker symbol out here, WNR. Let's go see what, this is Western Refinery. And the question is looking for a long-term trade on this for an IRA account. So long-term always says to me immediately, and I do mean immediately, go to the monthly chart. And let's go figure out what's going on with Western Refining. So we take, and I did just a little bit of work before we got started here. So we take a look at Western Refining on its monthly chart out here. We can see a trend line that it has broken, just like many of, not all, but like many of the indices out here. Many equities, clearly, if the indices are, the equities are. And that's the trend line, long-term trend line. This is the one off of the 2010 level out here. And the trend line, we're just really using the bottom of the candle versus trying to draw a channel line out here, but both are relevant. But right now we're just looking at a trend line. So what Western, you're looking for the long-term trade inside Western Refining. I wouldn't want to take a long-term trade on this until I saw Western Refining get back above the trend line. Now, what do you have going for you on a monthly basis? Well, you've got a nice little bullish reversal signal right here is what it looks like to me. There's swing point even, just simply January of 2015. This is the monthly chart that we're looking at. How can we, this January 2000, yeah, we're January 2016. 35 million shares to the downside, and you've already done 42 million shares. So in other words, Western Refining is pounding that swing point with volume, suggests that it's going to go back and at least test that area. If you get a close below that range out here, 31.83, this looks like a consolidation pattern to me. So, and you know, we see the double. Let's put this on a weekly basis. Maybe the weekly basis, it'll show up visually for you a little bit easier. Let's go ahead and pull this back. You might have on the monthly basis, but when I take a look at Western Refining, see how we have this, in essence, what we refer to as a double top. Look, it's not a double top until it actually breaks out the bottom. because what a double top oftentimes turns out to be is nothing more than a consolidation pattern. What's the difference between a double top and a double bottom and a consolidation? Well, it's very simple. When you have a consolidation, price is just simply going to go ahead and trade within that box out here. When you have a double top or a double bottom, meaning that price is going to actually move below the swing point, move below the consolidation level, then you've got your measured move to the upside or to the downside in this case. And that applies to Western Refining because we can see that it's trading with inside a consolidation pattern that's been in place in essence since 2013, September of 2013. So at this stage of the end, on a weekly basis, by the way, the swing point from January 12th, 11 million shares. This week's being tested with about 11 million shares as well out here. So if you're going to take a trade, which you can, it doesn't matter to me whether it's your IRA, close out of that trade if you see it close below 31.83. That's how we take a look at Western Refining. We come back, we'll take a look at Occidental Petroleum and anything else that you'd like. Steve Rhodes with TFNN. Dow's up 176, S&P 33. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 169. S&P is up 32. We're going out to Philadelphia to speak with our man, John, otherwise known as Z in the Tiger's Den. John, how you doing this afternoon?
Hey, Steve. Thanks for taking the call. Good week to you.
Thank you. Now, are you going to get any of this storm that's moving through the East Coast?
Oh, please. Are we? Talk 18 inches plus. Come on.
Oh man. Hey,
Yeah.
this is going to be a good weekend. Hopefully, you've got the internet and everything and cables up.
I could use a hand if you care to drive on up here and help me dig on out. I'd serve you dinner.
Oh my gosh, that's true. I tell you what, I've got a better idea. Just hop on a plane, come down here. We'll have great dinner. We'll just go out to the beach, and then we'll watch the weather reports.
There you go. Say, Steve, I wanted to ask for your view on NDX, specifically this question, the NASDAQ 100. Just to set the stage, it was clear to me that last week of the year, December 28th, 29th, when Amazon and Google spiked to new highs, and the NDX made a lower high up at 4,700. It was clear to me then the low-risk trade was a short, or liquidate all longs and go short against 4,750 or thereabouts. Now that we've fallen, and the low in the NDX cash just under 4,000 yesterday, question for you. Do you see any chance that the low that was made Wednesday and this bounce that's occurring is something more important, namely potentially a bottom that could give way to a rally to new highs somewhere out in time? Can you share your views on that question, please?
Well, there is that possibility, certainly. You know, the first thing that the markets, global markets, need to contend with and deal with is the breaks of their long-term trend lines. And as an example, on the screen here right now, many people believe, and I haven't actually done the correlation. Maybe you have. Maybe you can share with us. The DAX is the upper left-hand panel. How well do you think that the DAX correlates to the NASDAQ? Maybe not necessarily the NDX 100, but just the NASDAQ in general. Have you looked at that as far as a correlating factor, John?
Steve, I haven't. I'm going to leave that up to you, sir.
No, well, I've heard a lot of people talk about that, and if we just simply take a look at the DAX at this stage of the game, what the DAX has done. So if you are in that camp that it does, if we take a look at what the DAX has done on its move back here, all that it's actually done is test a short-term trend line, and that's the one coming off of September 2011. We can see that price has stopped right on the bottom of it. If that level holds, that's actually fairly bullish, and that would say, you want to, if people are still bullish out there, you want to buy something that has come back to a trend line. And right now, the DAX is sitting on that trend line. If we take a look at the NDX 100 specifically, and I were to look at its same trend line as the DAX out here, I think we're going to find, and that comes back to 2011, that price is also, in essence, really, it's not much different than its long-term trend line. And the NDX 100 has not even made its way back to that level. So from that standpoint, price in essence has come back towards its short-term trend line, hasn't hit its long-term trend line. The trend of the DAX has not been broken. But that says that the NASDAQ really needs to lift all boats higher out here. Because if we look at worldwide markets, the Shanghai, well below its trend line. The FTSE broke its trend line, which is the center panel, a long time ago. The Nikkei, hey, nice move last night, nearly 6%, I believe, out there, or 6.5%, 5.5%, something like that. But it still is below its trend line, as is the Hang Seng out here. And if we switch over to the U.S. markets with regard to trends, we know that the Dow, upper left-hand panel, is below its trend line. We know that the Russell 2000 is really sitting right on its trend line, which is really kind of interesting, because Russell 2000, certainly one reported on that's had the most struggles out here, but price has come back and is really testing that trend line. It's really right on it. If the Russell 2000 can hold this level, that says that there's more, that there's a bounce in it. New York Stock Exchange, a little wider swath of the market, that's got troubles. It's going to struggle probably just to get all the way back up to the 10,000 level. It's certainly not, well, I can't say whether it will or won't. I doubt that it will do it by next week. So we are seeing some breaks in the trends out here. Now, I noticed that you had posted a chart of the Wilshire 2000 inside the Tiger's Den, and I know that you like to take a look at that, as you should, as a better scope of the health or lack of health inside the market. And folks, what John was showing, I don't know if I have that if I can just simply post that in the, I think I might be able to just post that here on Tiger TV. I'll post that so that people that are watching us, well, that didn't do very well. Maybe if I try to put this at full size. Okay, that's close enough. So at full size, what John's showing here is he's showing how price came right back down to a trend line. Looks like to me you're just using a trend line here versus channel. So price inside the Wilshire has come right back into that trend line out there. And interestingly enough, if we take a look at the Wilshire 2000, we switch over here and we take a look at its weekly chart, it's giving you a really nice signal. And that signal, potentially signal, I don't know how the day is going to end here, but if it did end right now, what we're going to show you folks is you're going to see that the Wilshire is basically sitting with a hammer candle. So you've got a nice little hammer candle today, and oftentimes that is the bottoming of a market. And if you take a look at specifically at the Wilshire 2000, you come back, take a look at the hammer candle back in February of 2014. You saw that price moved higher for 4, 5, 6 weeks. If you take a look at the hammer candle back here in October 2014, price moved much higher, moved to higher ground out there. If you take a look at the hammer candle in October of 2015, price moved higher 4, 5, 6 weeks. So the question is, does today end up being a hammer candle for the wider swath of the market? And then would you anticipate or expect that the market would move higher? Hey, here's the clear signal. If we see a close below that hammer candle, we know that there's some real troubles in River City out there. So that's, I first started maybe answering your question by taking a look at the wider swath of the market. And what's interesting, because there was another question that was posted inside the Tiger's Den out here with regard to, let me see here, go to this workspace, with regard to the S&P 500. So we can knock both of these out at the same time. So just like the Wilshire 5000 had come down to its trend line, in the case of the S&P 500, folks, I know this chart here is just a little bit cluttered for you, but what you can see, the blue line, the blue diagonal lines on my screen out here, those happen to be the channel lines for the S&P 500 going back to March of 2009. And where price basically stopped on this move down thus far in January was right at the bottom of that channel line. So the trend is still the friend inside the S&P 500, as is the channel. And one thing that we can say, we know that price made that seventh wave move, that letter G to the upside, and it was followed up with a bearish reversal signal. And so the work that it was supposed to do inside the S&P 500 was done. Because what's supposed to happen when you get a bearish reversal signal is price is at least supposed to go back to support. Inside the S&P 500, it has also come back to support. So the S&P 500 is at support. Wilshire 5000 is at support. NDX never even made it all the way back there, nor has the DAX. John, can you hold on through the break, and maybe we'll get to answering your question.
Thank you.
Okay. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 173, S&P is up 33. We're on the line with John in Philadelphia, and the question that was posed is, can we find anything that would suggest that the NDX 100 might go on to form all-time highs? And so one of the pieces of evidence that John brought to everybody's attention out here, and I would say that would it be fair, John, to say that you're the godfather of using Fibonacci retracement levels for entering and exiting trades?
God, no. I'm just a puppy when it comes to that. I'll leave that to Larry Pesavento.
but you use them like they're religion out there, don't you? I mean,
yeah, I do use them successfully. Yes, indeed.
Okay. So one of the things that John was kind enough to point out to each of us out here was how the NDX 100 came all the way back to its 0.786 retracement, really almost right to the T. 39.91 would have been that number. So that's the first thing. The second, now, and to answer the question, is it possible that really all that's happened is we've seen a nice buyable retracement here, and inside the NDX 100 it can go to all new time highs? One of the patterns, John, if this was not an election year, I would answer you with certainty, unequivocally, that the answer was absolutely yes. And the reason I would do that is because over the course of the last 84 years, or our one-year cycle pattern that exists with inside of the market, is that the market makes bottoms in January. Typically, it's the end of January, but it doesn't have to be. We just know it's towards the end of January, and January 20th or 22nd, in my book, qualifies. And the normal cycle is that this is when I tell people when they're going to put their 401k, their IRA money to work, do not wait until April 15th. You need to do it at the end of January. When you see a cycle like this, when you see the market sell off, that's when you want to buy in. Because over the course of the last 84 years, the market makes a low then and moves up into May, moves up into June, finally makes a high in July before it pulls back into October, at which time you also want to go ahead and put some money to work. But the competing pattern out here just happens to be an election year. And in an election year, I only have, that was 84 cycles, John, that you and I got to look at. Here are 21 election cycles during that same period of time. And during that period of time, I've broken that election cycle apart between years that are down years and years that are up years. And there's one pattern that's consistent. Even though it's only 21, we've got 7 election years that were down years, 14 that were up years out here. And they are two unique patterns. So unique that you pretty much know early on which pattern it is the market is following. And in this case here, And the way that that pattern is formed, folks, is nearly right out of the gate, whichever direction the market is going in, you know whether you're in the cycle of the up year or the down year. We know we are in that down year out here. And this suggests to us, John, that the market is going to end up moving lower into March. Now, it suggested that we're also going to have a rally, which we've got going on right now. So if, you know, sometimes these analog patterns work really well. So far, this one is working really well. It's kind of like I see posted in the den every now and then. There's a real truth to it until it stops working. You know, keep using it. So we're supposed to have a nice hefty rally out here. That's even what that's the normal cycle in these 7 years out here. So in order for the NDX 100 to go ahead and make new all-time highs, it has to break this pattern out here that it's already started out. Not that it can't, but it has to. What are the elements that suggest that we certainly have that bounce out here? Look, in the NDX 100, you know, you've got this chart that we looked at where it's made a price relative strength divergent pattern. You got a bullish reversal signal today with a gap up. A gap up, rising window, that is a bullish signal. We know that we've got this island top out here that formed on December 29th and the 30th. John, if that gets taken out, there's no reason for the NDX 100 to not go ahead and make new all-time highs. If we take a look at the weekly chart for the NDX 100, we know that we've got a nice hammer candle that is formed out here, just like we looked at inside the Wilshire. Those are strong candle sessions out here. Hammer candles rarely fail. They've rarely failed inside of the NDX 100, just like inside the Wilshire. This says the market moves higher, but does it find resistance, you know, at the gap down from early January when we came back to work out here after the holiday? That's going to be the first level of resistance. But if we just simply take a look at wave counts, it says that it has more work to be done to the upside because it only made it to that third leg out there. So for those of us that follow the wave patterns, the NDX weekly says, yeah, I've got more to go. And inside the monthly chart, you know what's sitting out there if it gets to that all-time high? Your favorite wave session of mine, and it's like Stevie Wonder. We sing in the key of G out here. So, yeah, I can see the possibilities, but it really has to buck that trend that we are in at the moment. So that's my take. Now, give us your take.
Steve, thanks for that dissertation. I appreciate it. It just occurred to me, having looked at that low on Wednesday down at 4,000, it was worth asking that question. Could this tradable low or this short-term low be something more consequential? And there's a couple. The following factors lead me to at least consider the idea, and here they are. First, we came down and corrected, like 18%, so good stiff correction in the NDX. It held above the August lows, which was also above the lows of October of 2014. In this window of time here, January, we're in this period of time when the corporations are not repurchasing shares because they're in the pre-earnings release quiet period. And that, of course, will close. They'll report earnings. The corporate treasurers will be back in the market repurchasing shares. So we've got that demand aspect to come right in front of us. And then I look at the NDX 100 and notice that the top 10 stocks account for more than 60% of the total index, just because they're so huge. You know, Apple, Google, Microsoft, Amazon, Facebook, and the list.
Absolutely.
And what I noticed on those top 10 stocks, 6 of the 10 made lows Wednesday very much higher than last August. And the other 4, namely Apple, Comcast, Gilead, and Cisco, they all made lows that tested the August lows and rejected them. So when I look at all 10, I say, you know, son of a gun, those patterns have a bullish scenario possible. And then, of course, we've got earnings with these 10 forthcoming, including next week, I think Amgen, Apple, Facebook amongst those top 10 all report. And, of course, I don't know what the stocks are going to do in reaction, but we've seen bullish reactions in the past, hence I just want to be prepared.
Yeah, no, there's no question. Look, I think that there's no question that the majority of folks are not looking for this to be any kind of real significant bounce out here. Look, I will tell you that around the world, what the markets did. Now, when I say around the world, I'm referring to the Shanghai, the Hang Seng, and the Nikkei. They all completed patterns last night, and they completed them with nice moves off of those bottoms out there. So that, to the extent that we believe that the Asian contagion is one of the things that is a problem at this stage here. Last night was a really good way for them to begin the end of the move, so to speak. And as long as the U.S. markets here are going to close the way they are, that is absolutely a possibility. But we do have those election down year cycles, and until that breaks, we just have to be cautious. All right, my friend.
Steve, thanks so much.
You bet. Thanks for calling. That was John in Philadelphia. TFNN with Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 193. S&P is up 35. I need to just cover some things. I sent out a newsletter update for my clients out there. Now, we went long the market 3 days ago. So we're very close to having bought the bottom in this market. And one of the areas that we're long happens to be, just out of coincidence, if you believe in coincidences, is the NASDAQ 100. So we are long the NDX 100 out there. And so it's kind of nice that John actually called about that. And I had sent out an update earlier, about 12 noon or so, maybe 11:30, just to warn those conservative, those, we have different types of traders that are clients, and those who were conservative, I wanted them to have that opportunity to go ahead and tighten up some stops. And the reason is because we got to that seventh wave move out here that had that bearish reversal signal right here. This occurred at 11 o'clock. So it was confirmed at 11:30. I sent out the update probably about 11:40, just to make them aware of, because when you get to that stage, it's where you can see good retracements. Now, what we can see here is really strength inside the NQ on the 30-minute chart. Why? Because price only came back to an old resistance level that is new support. That is a TAS market profile high for its 30-minute time frame. Now, if we in fact see this high get taken out, which it looks like it will as we come into the end, it says that whole pattern recycles. So that helps answer another question inside the Tiger's Den with regard to, is this more than just really a bounce that is underway out here? But I also had put inside the newsletter, and I got two questions, so I really want to cover that with regard to the VIX index, because we also are short the VIX index. That's one of our other trades. It's not all, but that's one of our other trades out there. And it just goes to show you that I'm not able to walk and chew gum, or really write and chew gum at the same time. Now, I don't really chew gum, but you know the expression out here. And I was looking at this chart here, and I said another way that we will know, in essence, I'd have to read it exactly, but I'm not, but another thing that we're looking for that will tell us that the market is bullish is if, in fact, the VIX index closes below, I wrote 1559. It really meant to say 2319, which these two people, I believe, caught. And I'll go ahead and respond back to their email just in case they're not listening to the show out here. But to answer a question inside the den, you get a close below 2319 today. What that tells me, my experience, is that says that the VIX index is going to then move down to 2058. And then if it can get below that, it's going to move down to 1559, or more likely a little bit lower than that out there. So now that trade that we're in with regard to the VIX, it's really not driven off of the cash VIX index. It's driven off of the futures contracts, which is what it is that I use to track and then update my clients on that trade out there. So I hope that clears you up. I wrote 1559 was the number. That's the number that would be the eventual outcome as to where the market heads to. We'll see when the VIX gets down there. Should it get down there where the markets are at, that's likely where the next, at least short-term top would begin to form out there. Quick update. Yesterday, I shared with you guys the algo heat map. Now, this is a arbitrage system that's available now with inside the e-signal application, which you don't find. Typically, this is what large institutions are using. First, let me just, this is the update to today's trade. So earlier this morning, I don't know, 7:30 or so, I said I would go ahead and post this inside the Tiger's Den. This was, in essence, what I posted inside the Tiger's Den, but the symbols here, they change all the time. So it was really a matter of showing pre-market which symbols we're taking a look at from the long side as well as the short side. I know there's a couple of folks that actually saw some signals in here and went ahead and took those trades. This, if we take a look at it, is the update as of noontime, which would be, and this is the type of system that this is, the easy way to trade this. You put your orders in, and this is just really taking $10,000, dividing it equally amongst the top five, both longs and shorts out here. And you can see through noon, it made 0.75%. It typically makes money every single day out there. Folks, stay tuned. You've got David White. He's up next in the Tom O'Brien Show from 3 to 5. Be safe out there if you're in the snow zone. Don't even drive. And be careful when you're shoveling it. Have a great weekend. See you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.